Hello and welcome. In this video, we will learn what reserves and surplus is. Alright? In the previous video, we learned few of the headings from the balance sheet. Correct? In this video, we will learn what reserves and surplus is, and in the next video, we will learn few other headings from this balance sheet. Okay? Now, the figures here in this balance sheet are large. I do not want to take this balance sheet and explain you what reserves and surplus is because it might just confuse you. So what I'll do is I'll take a balance sheet created by me which has small figures to explain you the concept. Okay, so let us proceed. This here is the balance sheet created by me. Here you see the liabilities section, equities and liabilities, and here you see the assets section. Share capital is 200. Now what is share capital? We have not learnt about it. We will learn it in future video. Do not worry about it. Share capital is 200 crores. Okay. So the value is in crores. Current liabilities is 100 crores. Other liabilities is 150 crores. Okay. So totally it adds up to 450. 200 plus 100 plus 150, 450. In assets, we have fixed assets 300 crores, current assets 100 crores, other assets 50 crores. So totally it adds up to 450. So we have 450 here, 450 here, and the balance sheet is balanced. Okay. Now I have a blank row here. Something goes here. What is it? We'll see soon. Now, let us say that this company here in this example is running, it is working and it is earning profit. Okay. And let us say that the gross profit of this company for the previous year is 10 crore rupees. Okay. So 10 crore rupees is the gross profit of this company for the previous year. Now, this is not the actual profit. From this, there will be some expenses. Alright? And generally, the expenses are interest, tax, depreciation, and amortization. Okay? Interest needs to be paid on the loan taken or on the debt. Okay? Tax needs to be paid to the government. Depreciation and amortization should be considered. Now do not worry what it is, but all those things should be paid. Okay. So let us say that interest, tax, depreciation, amortization, everything adds up to 1 crore rupees. And let us say that the company pays 1 crore rupees from this 10 crore rupees. So if we subtract 1 from this 10, we will have 9 crore rupees left. This 9 crore rupees is the net profit. What is net profit? Net profit is the profit that the company gets after it pays interest, tax, and after considering depreciation and amortization. Okay. So 9 crore rupees is the net profit. Now, this entire 9 crore rupees belongs to the shareholders. Correct? It is the shareholders who had invested their money in the company. Right? So, only due to shareholders' money, the company was able to grow. So, this profit, this money, belongs entirely to the shareholders of the company. Now, the company cannot give this entire amount to the shareholders because the company needs to operate. The company needs to grow. company needs to make more profit, right? Only when the company grows, only when the company makes profit, shareholders will get more money in the mode of appreciation of the value of the shares. Correct? If the company grows, the share value increases, share price increases. That is how shareholders make money. So, this money cannot be distributed among shareholders because this needs to be reinvested in the company so that the company grows in future. All right. So what the company does is it pays 3 crore rupees as dividend to the shareholders. You see, company need not pay dividend at all. Company pays dividend to shareholder generally because shareholders will be expecting money, expecting some part of the profit. Correct? If I am a shareholder, if I have invested money in a company, I would be expecting some part of the profit that the company makes to be deposited in my bank account, right? So what the company does is, from this net profit, it gives or distributes some amount as dividend among all the shareholders. Now, what is a dividend? How does it work? I've made a video about it and it is on the channel. You can go through it. Okay. Let us say that 3 crore rupees is given out as dividend to the shareholders. So 9 crore rupees minus 3 crore rupees comes to 6 crore rupees. Now this 6 crore rupees is called as retained earnings. So what is retained earnings? The money remaining after giving out interest, tax, considering depreciation and amortization, and then after giving dividend to the shareholders is retained earnings. Okay. Now this will be reinvested in the company so that it can operate properly, so that it can grow, so that it can make more profit. Okay. So this 6 crore rupees is shown in other assets. Okay. So other assets was 50 crore rupees. 50 crore rupees plus 6 crore rupees. 6 crore rupees is the retained earnings. It will be showed here. Okay, it will be showed here. This 6 crore rupees will be in the form of cash in the bank. Alright. Now, even though this belongs to the company or this will be with the company, in reality it belongs to the shareholders. This was supposed to be distributed among the shareholders, correct? It should have been distributed, but the company did not. The company reinvested in the company itself. So in reality, this belongs to the shareholders. So what the company does is, it reflects the same 6 crore rupees as reserves and surplus. Okay. So in other assets, the 6 crore rupees retained earnings will be showed or considered, and the same amount will be reflected as reserves and surplus in liability side. So now if you add up, it will be 456. If you add this up, it will be 456. Okay. Once again, the sheet is balanced. So the reserves and surplus is from here. Alright. retained earnings goes to other assets, and the same is showed here in reserves and surplus. Okay. Reserves and surplus is made from two things. One is retained earnings, the one that I explained now. The other one is share premium, which we will see later. Okay, do not worry about it. I hope it is clear. Now, let us proceed to this. This is the balance sheet of Reliance. If you see here, we have reserves and surplus, these many crores, and other assets, these many crores. I told you that the retained earnings will be considered here and reflected here, or the retained earnings will be added here in other assets and also reflected in reserves and surplus, or as reserves and surplus, correct? But if you see the figures, you have this many and this many here. This is much lesser than this, correct? So here it is 7 lakh crores, here it is 1 lakh 78 crores. This is because the company has used the money to buy land, to buy equipment, to buy machinery. So what has happened is other assets has been converted into fixed assets. If you see fixed assets here, we have a large figure. Basically what the company does is it reinvests the amount in the company by buying more land, more equipment and more machinery. Okay. So if you see that the other assets is less than reserves and surplus in any balance sheet, then go ahead and look at the fixed assets. Fixed assets will be large. Okay, it will be a large value. It means the money from the money from retained earnings or other assets has been used or reinvested in the company. So when the company does that, company can produce more and earn more profits. Okay. So if reserves and surplus and fixed assets increases every year, it means the company is growing. If reserves and surplus along with fixed assets increases every year, it means the company is growing. Why? Because company is reinvesting the money in the company to produce more, to earn more. Correct? Which basically means the company is growing. Alright. So let us look at the balance sheet. Now we have 5 years here, 2019 to 2023. If you see the reserves and surplus, it was this much in 2019, increased to this much in 2020, increased to this much in 2021, increased to this much in 22, increased to this much. It is not increased, it is decreased to this much. Maybe the profit was less. Okay, but you can see the value here. Alright. Now if we go to other assets here, it has increased here, increased here, increased here and decreased here. Alright. If you see the fixed assets, it has increased from here to here, here to here, here to here and here to here, which basically means that the company is expanding. Company is buying more fixed assets, meaning company is producing more, meaning company is making profit, company is making more profit. Alright. So basically reserves and surplus is nothing but retained earnings which is showed in other assets. Alright. I hope the concept is clear. So that's it for this video. I'll see you in the next video. Till then, take care and thank you for watching.